high-tech industry, which has been a sold-out class for Yale School of Management's global network on advanced management. Both that network and the genesis of the Yale Center Beijing have in large part been due to former Dean Ted Snyder's efforts and the SOM team's efforts. So I would especially like to thank him and the School of Management. So for those of you who may be new to the center was founded in 2014 as Yale University's only university-wide center outside of its US campus, representing all 14 schools. And throughout the year, we host events such as these, where we invite thought leaders to discuss the most pressing and cutting-edge issues around the world. And today we're in for a treat. We have Professor Ted Snyder, who is a specialist, an expert in antitrust and the economics of industrial organization, and has applied the IO framework in analyzing many sectors, and now including the high-tech industry. We have Logan Bender, who is a Yale SOM graduate and seasoned technology investor in the Silicon Valley. He has also been an angel investor and an equity research analyst. They have been doing these briefings for years, and we're very happy to bring this to a hybrid audience here at Yale Center Beijing, thanks to Jakob Madre's help. He is Ted's very capable research assistant and a Yale University alum. Today, we're also very honored and privileged to have a special guest here with us, Dr. Brian Gu, who is himself also an SOM alumnus. He is the vice chairman and president of Xiaopeng, one of the world's largest automotive companies. He has been leading the company's corporate strategy, legal affairs, finance, investments, and international market expansion. He has helped the company. He's been instrumental in helping the company raise $10 billion in capital, get listed on NYSE and the Hong Kong Stock Exchange, built partnerships with Alibaba, Volkswagen, and Didi, as well as helped catapulted the company onto MSCI ESG Research, one of the highest globally ranked automotive companies in the ESG space. So without further ado, tonight we will have Ted and Logan lead with a discussion on the EV industry, its market, and what they're seeing as challenges and opportunities. And then the three of them will have a discussion about their outlook on their industry. So let's welcome all of them. Thank you very much.
Thank you, Carol. And it's an understatement to say we are grateful for everything that you and your team have done to help make this webinar series happen and attract audiences who are connected to Yale Center Beijing. So thank you. And a special thanks to Dr. Brian Gu, whom I've not seen for a while, but I remember with great fondness. And we look forward to engaging him. And as we get started, I am going to just give a little background to build on what Carol said about the webinar series. And it does indeed derive from the course that Logan and I taught on economics of high-tech industries for 5 years. And one of the things that students and now alumni of the course really enjoyed was discussion of current events, what's happening in major industries. And we focused on the mobility sector, payments, e-commerce, and video-related activities. So 4 big verticals across US, rest of world, and of course, China. So that's the background. Our first webinar was on the so-called Mag 7 US stocks like Apple and NVIDIA. And the feedback we got was very positive. I think one of the things that people liked the most was the two swimming pools metaphor. The idea was that for a long time, the Mag 7 swam in one pool where there were distinct competitive lanes. And then over time, those lanes blurred, e-commerce and social commerce, for example. But the big development with the Mag 7 has been, of course, AI. And that's a different swimming pool. There are no lanes, and there are lots of different competitors and very big bets being made by not only the Mag 7, but companies all around the world. So that is a little background about what we've done so far. We have a website. For those of you who are interested, you can check that out. We have some briefings. We have other materials. We have the first webinar recorded, and we'll, of course, record and post today's session with Dr. Brian Gu. Logan, maybe we should switch to the next slide, and you could introduce yourself, and to the extent that you want to say
Sure.
more than what Carol said.
Yes, well, Carol, and especially Dr. Gu today, thank you for joining us. We value having executives on our lecture series. We always have a productive discussion. The audience always appreciates it, so thank you very much. My name is Logan Bender. Ted and I have taught this course for 5 years. We built it. The idea was we want to bring economics live to the markets. What's happening in the technology space, in the high tech space? What is the current event of the day? Sometimes it's automotive, sometimes it's video streaming. We look at everything from streamers in Asia. What are their business models doing versus the US? And so I won't go too much past that, but this lecture series is designed to pick current events and thematics that are top of mind, top of people's mind, and to bring you to the forefront of that industry and have guests like Dr. Gu unpack some insight for us. So Ted, I'll kick it back to you.
Yeah, just nothing really. Well, actually, there's one thing to add about me. I did serve as Dean of Yale School of Management and 2 other top US business schools. Right now, I'm getting a lot of questions about what is going on with US business schools. And I have a piece coming out in a publication called Poets and Quants, which is the leading publication about business schools. So for those of you who are interested in my views about what's happening with US business schools, look for that forthcoming piece in the next week or so. But let's move on to our special guest. He is, as Carol said, vice chairman of, and I don't know how to pronounce it. I call it XPeng. I'm sure that's not correct.
That's right.
But he is an amazing executive with diverse, successful experiences and banking, technology, strategic partnerships with entities like Alibaba and Volkswagen, Didi. He's studied in the U.S. at University of Oregon, University of Washington, where he got his PhD and MBA from Yale. So, Brian, welcome. I think, one thing we wanted to do is get your reaction to the next slide, which has some information about XPeng. And I don't know if there's anything here that requires correction, but as you look it over, there's some information about the founding, the initial funding, your board. It says that your first vehicle was produced not that long ago, November 2018, has information about the IPO, stock exchange, first exports to Norway, cooperation with VW Group, sold vehicles in 2018 and a dramatic increase in output to last year. Is there anything on there that you would want to highlight about or correct, Brian?
Sure. I think there are a few areas I'll probably give a little bit more color because I think it was probably not the right way it was happened. And let's first talk about the founding of Xiaopeng XPeng. It is correct that it was actually founded by a group of very young, talented engineers coming out of Guangzhou Auto back in late 2014, early 2015. And at the time, He Xiaopeng, who was actually a very successful internet entrepreneur, was just an investor. He actually, at that time, just sold his previous startup company called UC Web to Alibaba, and he became an executive of Alibaba. Because of the sale, he's also personally, I would say, very successful and received a lot of wealth from that first startup. So he was looking for the next big thing. So he actually was very excited about the EV opportunity. But that time, because he's an executive at Alibaba, he could not obviously start up his own company. So he found this small group of engineers who has a vision of building EV. He said, okay, I'll be your backer. So that's the beginning. Is Xiaopeng is a financial backer of a small team who actually became XPeng. And I think they're very smart of them because soon after they received the money from Xiaopeng, they renamed the company as Xiaopeng汽车. So the guy can never leave the company anymore. So he was forever attached to that venture. So that was the very early days. And He Xiaopeng himself actually only joined as chairman CEO late 2017. And that's actually when I joined. I mean, I joined about early 2018. He and I are actually, personal friends. We know each other for several years before this venture. And he just one day showed up at my house to say, well, I'm thinking about leaving Alibaba. I want to go into this company I funded, want to, build the next great company. Do you want to come along? I said, okay, how big is the company? He said, well, we have a few hundred people. I said, well, how much money you have? He said, oh, we haven't raised a single round yet. And then started thinking, okay, do we have a car? He said, well, it's probably a few years away. So at that time, I don't want to say no to a good friend. I said, let me think about it. But it took me about 6 months to see things start moving and got convinced that this is actually a very interesting, exciting opportunity. So that was actually the beginning of XPeng. We also obviously moved from a few hundred people at the time when I joined to now about 25,000 people. We have now launched 7 models. The first one was actually the end of 2018. And then since then, we've been launching approximately 1 model per year for the last 7 years. And now if you look at the total cumulative delivery that we have delivered, we actually delivered over 760,000 BEV, battery electric vehicles globally. And if you look at that number and compare to the global EV companies, we actually are the second to Tesla in terms of a BEV delivery by a company that started after Tesla. So we always talk about 新造车, right? The emerging names. Nobody how to define them. I say, well, maybe let's make it simple. Anyone who started before Tesla is old company, right? I mean, because Tesla really showed people how EV become, the new product was software designed and defined, and also the different product definition. Anything started after Tesla, a new company, we call it emerging EV company. And they'll actually, if you look at the numbers, probably about 300-400 startups that actually happened after Tesla was founded in 2003. And we actually the second largest after Tesla, if you look at that group. So it was
Brian, may I ask you a question? Sorry to interrupt. You mentioned that you developed new models, about 1 new model per year. What would you say is your most distinctive model that is now in your portfolio?
Well, I think it's quite interesting because we have launched a number of models that actually became very impactful at the time of launch. For example, P7. A lot of people know P7. When we launched the P7 in 2020, it was built as the most successful EV made by Chinese companies. It was actually the most best-selling Chinese EV sedan. It was also one of the smartest vehicles on the street, because when China start to produce cars that has the self-navigated ADAS function, P7 was the very first one to demonstrate the highway capability. And then, subsequently, we also have demonstrated in other models, the first in urban settings and so forth. So I would say P7 is a very iconic Xpeng product. Everybody who knew Xpeng that time knows P7. And then the last 2 years, obviously, the rave is all about Mona, right? I mean, probably people in China, there's this, again, a sedan product that was launched about 9-10 months ago. It became actually the #1 A-class EV sedan with its unique design and also smart capabilities, and also targets the much more mass segment. That also became a very iconic product for us. But along the way, though, we actually have quite a few products that has demonstrated very unique and outstanding features and well remembered by the customers.
Can we just define ADAS for the audience, Ted? Advanced Driver Assistance Systems, for those who are unfamiliar, the ADAS technology. Just clarification there. Go ahead.
Great. So let's go to the next slide, and we'll continue to ask Brian questions along the way. But our approach is to look at the economics, demand and supply. Couple things to pay attention to. Vertical integration strategies differ. Geography is very important. And then we'll get into some developments and challenges and innovations, as well as talk a little bit about tariffs and global tensions. And we'll wrap up with some implications and what to watch for. And of course, we'll have time after for questions, many of which I think will be directed at our special guest. But let's go to the next slide. And I think I want to just cover very quickly some basics. If for those of you who are in the US, you might get the impression that the EV market is faltering, but the data don't show that. The EV market is really doing well. And when we say EVs, Brian mentioned BEVs, battery electronic vehicles. There are also hybrids and so forth. But more than 20% of new cars sold worldwide were electric or hybrids. China, skipping down to the last point, is emerging as the world's EV manufacturing hub and accounts for a very high percentage of global production. So next slide. Here's a graph to just show you that tremendous growth since 2015, and the plug-ins, the batteries, and the hybrid electrics. Next slide. And here's a ranking of the largest global manufacturers. And one thing to note is that BYD is now #1, and by a substantial amount over Tesla. And if you've read the stories about Tesla in their sales output in China and in the EU and elsewhere, BYD has moved ahead of Tesla in each of those regional markets. VW Group, with whom Brian has a partnership, is 3, and you go down. Let's go to the next slide. We of course, everybody would probably say, of course, EVs and the versions of EVs are high-tech products because, #1, they embody new technologies, electric motors and chargeable batteries, software, lots of new technologies. But one thing that I think is important in understanding the global market competition is that compared to internal combustion engines, ICE vehicles, EVs have a different cost structure. At least this is my opinion. And we believe that different cost structure fits the classic characteristics of high-tech industries. They're more upfront fixed costs in establishing production capabilities and design, but the marginal costs, the so-called incremental costs of producing new vehicles is lower for EVs and hybrids compared to internal combustion engine ICE vehicles. So high fixed cost, relatively low marginal costs. So EVs fit what Logan and I believe are the classic cost characteristics of high-tech industries. Brian, do you agree that with number two, or could you elaborate and maybe add some color context?
Well, first of all, I agree that EV is a high-tech product. I think I approach from a very different angle. Instead of focusing on the cost structure, I actually focus on the construction of the product, why this can be more high-tech versus traditional gas-powered automobile. There's actually big differences. For example, EV by nature has a large battery, which powers the vehicle. At the same time, if you want to make a product high-tech, also intelligent, which means that you need to have a lot of computational capabilities. Traditional gas-powered vehicles does not have the power nor the computing power to do that. EV can do that because the battery is largely sufficient enough to power the chips, the screens, the various the tech components. At the same time, it can also have large computational powers on board. For example, the AI chips that we use for EVs cannot function in ICEs because there's just not enough battery for that. So the very design or the nature of the product makes it actually higher tech or much more intelligent. That it can design AI around it. You can use a lot of software, whereas traditional vehicle is difficult. I think that's another way to look at whether it's high-tech product versus a traditional product. But also you're right in terms of the cost structure. In EV, I think a lot of the upgrades, a lot of the functions are defined by software, defined by AI, and that it has a huge scalable nature to it. Versus the traditional automobile, it's more mechanical. It actually has less of the software definition or AI capabilities. That also separates, I would say, from a cost structure perspective, where is the value coming from? So I think those two things I would say define the high-tech nature more than the traditional cost structure.
Ryan, those are great insights. Thank you. I think you've clarified differences between ICE vehicles and EVs, the role of software, AI upgrades, very helpful. I also like the point that you're making about the ability of EV manufacturers to differentiate their products. And the other things that are in the background that Logan and I always keep in mind are economies of scale, economies of scope, network effects, and we'll get into those issues. Let me just quickly mention a few demand factors on the next slide. And in the U.S., it's at least that customers are still choosing between EVs and traditional vehicles. Some of the issues in the U.S. are increasing the range, shortening charging times, reducing safety concerns. Down the road, meaning in the future, one question that we have posed to ourselves, Logan, you might want to take number 5, but how do you think about potential competition and substitutes?
Sure, I'll comment on number 5. When we think about car ownership, you have total kind of life cycle of the vehicle. When we traditionally think of a car, we go buy a car, we drive the car for 10 years, we then exchange it for a newer model and what have you as you move through your life. However, that is not necessarily the case when you have robo-taxis or you have rideshare as a service. You can essentially, especially in an urban environment such as Beijing, essentially live your entire life using mobility as a service. You need to get groceries, they can be dropped off. from a vehicle that you no longer own. Mary Barra at General Motors has talked about an idea for years in which they have essentially a fully automated or ADAS capable vehicle coming off the assembly line, driving as a service around the community for 10 years, and then going right back in and getting scrapped and having a new one being built. And so the concept of mobility is changing. And you look at programs like Uber in Pittsburgh, or what San Francisco is doing with their Waymo taxi service. Mobility as a service is changing. It's changing how we think about our ownership of vehicle. Do you necessarily need to own a car is going to be a question. Our children may not even have licenses, for example. They may not need them. And so, Brian, you may comment. I mean, there's cars in China without a steering column. There's, commercial vehicles that are moving along the interstates every single day. And so it's really interesting. And that's why I want to highlight this. These substitutes is the state of the industry now is not necessarily the state of the industry in 5 years or 10 years. So let's think about that when we discuss these thematics. Back to you, Ted.
Brian?
It's add to what Logan's saying. We completely agree that the trajectory of development in mobility is accelerating so much that I think the automobility or robotaxi will become reality. I would say in a reasonable amount of time. I think when we first started in this EV venture, I think we saw robotaxis almost like very, very far away. But now today, I think it is actually going to happen, and it's going to happen probably sooner than a lot of people think. There are two ways to do it. One is actually, a lot of the companies, probably you hear about, Baidu's Robo-Kuaipao, Robotaxi, or there's some level 4 companies. So they go directly to level 4 and try to create products that fit for Robotaxi scenarios. On the other hand, what we focus on is we think, the product can, gradually progress towards a level 4 like scenario outcome. Right now, for example, our cars are still driven by humans, but the cars possess increasingly more autonomous driving capabilities. Right now, obviously we are still not level 3 because legally you're still required to be responsible for the driving. But the car technologically can actually navigate most of the scenarios in Chinese urban roads. And we think with advancement in technology and software aided by AI, as well as better and redundant hardware architecture, we'll probably see level 3 probably as early as next year on Chinese roads. Level 3 for a lot of people here is that actually you are still requiring a steering wheel, but the car is now legally can navigate on its own. But you're still required to be sitting behind the wheel. But I think the scenario Logan mentioned is actually level 4, which is actually remove the steering wheel altogether. There's no way to resume control. So the car is completely autonomous. And that's level 4. We think level 4 will probably happen in 2 to 3 years in China and then expand into wider use areas. So that's actually the future I share completely with Logan. But one thing I think we'll probably have a slightly different view of the future is that I think there's still going to be personal ownership. People would like to have their own vehicle, even if it's purely autonomous. I think the need for personal space, personal preference, customization is still there. So I think there's still going to be, family-owned autonomous driving cars. But you can imagine those cars can be actually producing for the owner, right? I mean, if you have an autonomous driving car at home, you can call it your own car. But when it's not used, actually can be leased or being used to transport people or using mobility services. That actually we think is probably very likely to be a scenario rather than completely third-party owned vehicles that comes into services. But I'm sure that's also a valid scenario as well. So in the future, maybe there will be parallel sort of a mobility sort of scenarios. One is personal vehicles, but can be used for mobility services. And there will be also third-party, purely service-focused mobility vehicles. But anyway, I think the mobility as we know it will be completely different in the 5 to 10 years' time.
Brian, let me ask you a question about the role of density, population density. Neil Shen, many of you know, he contributed to our class. And one of the things he said that was important to take into account in the development of high-tech industries in China, for example, the role of mobility as a service is density. And the number of Chinese cities with more than 2 million people or 4 million people vastly exceeds the number in the US and in the EU. Do you see density playing a role in the development of the EV industry in China?
Yes, I would say EV as a product is actually most widely used in larger, denser cities for several reasons. One is that one of the main concern people has about EV is range anxiety. So if it's used for long distance travel or traveling in smaller cities lacking critical infrastructure like charging stations, when the EV penetration is much lower. So that's why if you look at major cities, cities has large populations, city has more wealthy populations, tend to have higher EV penetration. We see that in China. We also see that around the world as well. Look at Hong Kong. The EV penetration is now over 70%. Singapore is gradually coming up, even though Singapore has very small subsidies for EVs, but still I think the EV penetration is increasing. You also look at the larger, more denser populated areas with affluent population, EV penetration is always the highest. And that actually speaks to both the user base as well as infrastructure readiness.
Thank you. Jakob, could you skip ahead to 2 slides, the one that shows the rise of one more? There we go. Just wanted to get this visual on the rise of the Chinese EV industry. It is indeed spectacular through 2024. And then if we could go back to the previous slide that shows patterns of production and trade. And I won't go through this slide in detail, but if you just focus on China, it's the biggest circle. And then you ask the question, where is China selling outside of China? The EU, for example, is a market that's important. So you get that gray arrow from China to the EU. You notice that there's really not a direct arrow from China to the US. The US has some sales in the EU, but geography is important. And some of that, of course, reflects global tensions. Let's go to the next slide. The rate of adoption varies greatly by country. Brian just touched on that for reasons that I don't really fully understand. Norway has a very high rate of adoption. And then on the right, USA is low at 10%. On average, the world is at 22%. China is above the average. So China above the average, US below the average. Next slide. Vertical integration is important. Backward into batteries, rare earth minerals, forward or sideways into charging stations, forward into dealerships, servicing, upselling, even financial services. Companies are choosing very different strategies. Next slide. This may be a bit of a challenge for people to read, but this shows a profile of BYD and Tesla. And Logan, since I seem to have a little trouble with early morning voice, maybe you could talk through this.
Yeah, sure. So when we look at this slide, we also talk about let's take a step back. We looked at Tesla several years ago. Tesla's stock price is rising, the valuation was being impacted. And we asked ourselves, well, why is Tesla valued like a software company, carried a very high multiple in terms of valuation on the public market? And there's a few ways you can look at it, but one of the ways you can look at it is how developed their manufacturing process is and how much integration they've done. A simple way to say it is they build the machines that build the machines. They build the machines that then build the cars, and they can do that better than anybody else, or so they say. And the market believe them, which commands a higher selling price. They can make a more developed vehicle that the consumer demands. They have better charging networks, which impacts the valuation. But BYD recently has come out with some incredible technology. Not only have they overtaken Tesla in terms of absolute unit sales, they can manufacture at scale and cost effectively. And more recent developments, such as the rapid charging, they can charge a battery. I believe it's about 80% in 5 minutes. I have not ridden in a BYD vehicle in many years, so I can't substantiate that claim. Or it is an interesting data point, and that has been a resounding news item around the world. And so, can Tesla catch up? Is BYD pulling ahead of Tesla? Well, they are in unit sales and growth, certainly, and they have a larger market in China. The absolute size of the market is so much bigger in China. They can sell the cars for cheaper, and they seem to be winning that. In terms of Tesla's valuation, obviously, aside from the political turmoil that's happening in the US, Tesla's valuation has fluctuated tremendously. The story started to stumble a little bit. The BYD story hasn't stumbled in the same way. I think their stock price is still elevated. Brian, is there anything, a data point or two you want to unpack about your insight into the integration in the Chinese automotive sector as of late?
Well, I think Logan, you had a very good summary over there. I think a few things that's different. I would say BYD is more vertically integrated with a lot of suppliers, tier one, even tier two, that they make themselves. So they actually not only makes money from being the OEM, but also they take away some of the supplier tier one, tier two margins because they integrate that. So that's something very different compared to other OEMs, including Tesla. So I think most of OEMs does not do a lot of their supply chain work. Another thing I think I have to point out is that the BYD, if you look at their technology, they're very good with the battery and electric powertrain. That's something that they have known for. Their battery is cheaper, and also they have scaled manufacturing on their own, which give them some advantage. Again, that's related to the vertical integration point that I made. For most others, including ours, we actually work with battery partners in leading names in China. So we don't make battery cells because that's a completely different area. So we think that's too capital intensive. Another thing I think about Tesla, I think you're very correct that Tesla, even though it's known for its EV product, but if you look at the capital market position, people no longer just look at it as an EV company. It's an AI company, it's a robotic company, and that's something I think give them the high sort of valuation mark, compared to the other traditional automotive companies. In fact, if you look at the ratios, right? There's a valuation ratios all over studied at SOM. That if you look at sales ratio, because a lot of those probably are valued on PS. Tesla has as high as like 6 times the sales, whereas BYD is about 1 time sales. We're roughly 2 times sales. So that I think also the ratio points to the people perceived technology as well as their future sort of tech positioning. So I think that's something I think differentiate across those 3 names. But it's a very different scale comparison. BYD is a lot more, I would say, bigger in scale, but they are obviously selling at a much lower price point. So that's a very different positioning versus Tesla. Even for us, I think our average price point about 30% higher than BYD. But I think again, the currently I think scale is a lot of people who investor will focus on it. So I think BYD are getting a lot of the economy scale benefits from their operations.
Great.
That's
Welcome
a
back,
perfect-
Ted. Hope you're feeling better. Yep.
Yeah, that's a perfect segue into our next slide. We just wanted to get a little more granular. Here are some examples of what EVs cost in the US. And let's go to the next slide. Here's what Tesla's Model Y costs in China based on information we have. Let's go to the next one. Here's BYD's Song Plus. What does it cost in China? Very impressive range, $22,000 roughly US. Next one. And then Xpeng. And beautiful car, by the way, Brian.
Thank you.
What would you say about the information about this particular G6?
Well, I think G6 is a very good example because it competes with Model Y around the world in 30 different countries right now. And in some of the markets, even though we're a new entrant, G6 is outselling Model Y already. So that's actually a very encouraging sign for our products. I would say that from a pricing perspective in China, you can see that Model Y is about 30–40% higher in price than average G6. But G6 actually has probably better drivetrain because it's a high voltage, fast charging vehicle versus a Model Y, which is slow charging. That's a big difference you can notice. Going to the same charging station, plug in the car, G6 charges twice as fast as Model Y. Secondly is that this one has what I call the all-scenario autonomous driving ADAS function, which can help you navigate on the streets of China. And we don't charge for it. It's all included in the price. Whereas Model Y, for the same FSD, you have to pay another 60,000 plus RMB more for that price. So from a value perspective, it's definitely, I would say, has a very attractive value propositions. The other thing I think it's noticeable is that the BYD, no, not BYD, the Model Y only had a refreshment recently. For the last 5–6 years, Model Y hasn't really changed its look, nor most of its interior, as well as their capabilities. Whereas for us, given how competitive the Chinese market is, we actually are focused on making improvements on a yearly basis. And also the software OTA is even more frequent than that. So that's actually also points to the competitiveness of Chinese product. Even though in the beginning, I would say Model Y has a lot of I would say superior capabilities, but over the years now I think Chinese product has caught up in many of those areas already.
So that's why I think we expect a lot of EV manufacturers to experience financial trouble. And if we turn to the next slide, Logan, maybe you could talk through a little bit of what's happened recently in the US.
Yes. So 3 or 4 years ago, we got interested in some recent developments in EVs in our class. It was a thematic with our mobility. This was kind of, it was the year of Tesla. Tesla's valuation rose, but here comes Rivian. Rivian was a privately traded company. It had garnered tremendous investor support from venture investors and private equity, et cetera. When they came to IPO, their valuation was carried at about $110 billion. That was the market expectation of what the entire enterprise was valued at. Now, they came out of the gate and they stumbled. I think, Ted, within a year, maybe their stock price was down 80 plus, almost 90%. And Brian mentioned capital intensity earlier. Well, these are not cheap businesses to start and to fund. You have to pour billions of dollars of capital into getting this business up and running. You have to have tremendous investment in human capital, excellent management, good banking relationships, etc. Rivian, their truck, I think, was priced at around $80,000 US, and so your market of buyers was fairly narrow. I mean, imagine having a discretionary spend to buy an $80,000 vehicle. It's not very common for a US household to have that. on hand. And so their expectations, I think, exceeded investor appetite and risk appetite for that story. We've seen some other cars come to market, Fisker, et cetera, and these Lucid is another one. They're very expensive to make. They stumbled. The story was flimsy with the narrative. How many buyers are they really? They produced these vehicles. They missed the targets. They got thrown a lifeline. In summary, the U.S. startups in the EV space have struggled, and Tesla is a unique example of a company that has been around long enough, survived long enough, developed learning by doing, and applied other economic principles that they've inflected into a profitable position. We haven't seen that from a cash flow perspective in the other EV makers. So, Brian, maybe you want to add to the narrative here, or Ted, back to you. But it's been a shaky story in the U.S. for EV startups in general for the last several years.
Well, let me just ask Jakob to show the next slide. And Logan, I just wanted you to expand on one thing. This was the Rivian model that captured a lot of people's attention. Next slide. I'm sorry. Let's go back to that. I mean, one of the concepts that we always keep in mind is total addressable market, and then what's the market for individual products like this Rivian product. And how would you assess that, Logan?
Well, the brass tacks of it is, who really is your buyer? Now, a vehicle like this, the light truck category in general is the fastest growing category in automotive in the United States. Well, EVs are higher growth, but you get my point that if you're going to go buy a vehicle, light trucks are a category that has garnered a lot of attention from OEMs recently because they sell more of them. People want capability. With Rivian, this is a very expensive vehicle. The battery's large, but the range is not flattering. Let's just say 300 miles. So who's your real buyer? Is it a person that's like a general manager at a construction site? Maybe, but how many of those people are in the market for an $80,000 vehicle? Needless to say, the total addressable market, or the TAM that we say, Ted and I believe, was much more narrow than was implied in the IPO, or was implied by some of the investor base that invest in Rivian in early days. We thought that the addressable market was actually much less than, and that's proved to be at least directionally correct. They haven't sold nearly as many vehicles as they thought that they would. They faced bankruptcy. They got a line of credit, I believe, or investment from VW, et cetera.
Yes.
So the story continues, but yes.
And then contrast that with the vehicle that's supposed to come out, Slate, a small pickup truck. The price of that is expected to be $20,000.
$20,000. It has a 4x8 bed. It can haul things like lumber. It's affordable for a consumer or for a young person starting their career in construction or what have you. And it's a modest vehicle, but it's a practical vehicle. And so I think focusing on practicality is a different approach than focusing on a much higher ASP car, Ted, in my view.
So Brian, you mentioned that the Chinese market is very competitive. Let's go to the next slide. How are the Chinese manufacturers doing? Maybe you could comment also just on the nature of competition in the Chinese market.
Yeah, I think, well, first of all, let me just give you some snapshot of what the China EV market or NEV market looks like today. So you show the numbers. Last year, there are about close to 12 million what we call new energy vehicles sold in China. That includes battery electric as well as plug-in hybrid. So, and that also represents a penetration rate close to 50%. The reason I mentioned that penetration rate close to 50% is in China, EV is no longer viewed as a niche product. 5 years ago, when we launched our P7, when we started making EVs, the buyer of EV products all are niche buyers. They're affluent, they're progressive, they're they're early adopters, so they can tolerate a flawed product at higher prices. Fast forward to today, EVs are competing with every other vehicle on the road, made by traditional ICEs, made by, the foreign JVs as well as domestic automotive companies. They're competing with the same price segment of a normal, regular automobile. So you have to make sure you're competitive. And you cannot just say, we have a flashy, interesting, weird-looking car that stands out. You have to make sure if it's people's taste, if it's people's wallet size, you actually can achieve functions around the home, and people can have the convenience of using it every day. That is what changed in China. I think what Logan you showed in the US, I think US still are left with the niche positioning of EV today. If you look at what product is being built by Lucid, by Rivian, the price points, the usability are not, catered to mass market or everyday drivers. So that's, I think, the difference between China and US today. And then commenting on the competition, how did China, arrive to where we are today is through fierce competition. Chinese EV market, I would say, is probably, if not but one of the most competitive market in the world, and one of the most competitive industries among all industries in China. When I first joined XPeng, there was actually a Bloomberg article talked about in 2018 alone, there's 285 or 385 companies from China raised money to build EVs. That's how crazy and how large that group is. And fast forward to today, the new names that was mentioned in that article, I don't remember there are 285 names or 385 names. I think from that group, there's only probably a handful that's left. And that's how competitive that whole process was. For us, every year we're competing with different players. In the beginning, in 2018-19, we're competing with other startups like Weima, like the Gaohe. And then later on, we're competing with Chinese OEMs. And there's foreign JVs. And last couple of years, it's like Huawei and Xiaomi, right? I mean, every year there's a different, it's almost like playing a video game. Every stage you're beating a bigger boss, right? First of all, you beat up the small guys and then the regular guys. Now you have Huawei in front of you. How do you compete with that, right? So every day we have to think about how we can compete. And through that cutthroat competition, you produce these last man standing on this list. So that's how competitive the Chinese market. So what produce, what's the players actually represented at the end? One is that you have to represent skill. In order to survive, you cannot be a niche player anymore. You have to have the minimum skill to survive. So I would say in few years ago, people say, okay, 100,000 per year is how you can become a successful EV company. Now 2 years ago, maybe 200,000, and now it's maybe 400,000. So we have to be at the right scale to be at least competitive and surviving this cutthroat competition. So that's why we are launching more models. We are building more, entering into more categories. Second is actually have to have your own technology differentiation. You cannot have just be another company just because you can be slightly cheaper, or you can have a car that just look alike. You have to have a technology that can differentiate you from other companies. So that's why we focus on full stack autonomous driving capabilities. That's why we focus on building our own chips. We actually the first EV company gonna have our own AI mobility chips in our cars by second half this year. And also we're gonna focus on making sure that we have the most advanced drivetrain, for example, the high voltage, faster charging technologies. All of that is necessary to produce the competitive, technologically advanced vehicles. The third thing is you have to be global. You cannot stay local, because even as a young company, if you are only limited to a domestic market, and you are not able to monetize or amortize all the R&D that you have invested into a much larger and wider global market, you're at a disadvantage. So I think another thing is you have to be a global player. So the remaining players all have to do all of that perfectly in order to survive, to survive this competition. So that's why I'm saying, if you look at these on the list, these are names that has scale, has technology, and has limit and various global capabilities as well.
Brian, you made a really important point about a competition dynamic that I think often gets lost in the Western analyst community. I used to be an analyst in covering Chinese equities as well as their US counterparts. And Brian mentioned 285 or 300 competitors it was in the EV space. Nothing like that would occur in the West. And so I'd like the audience and the people that are sitting with us on this lecture to understand that if we look at, hey, what's the US EV startup space? Maybe there's 15 or 20 of these competitors. In China, it's hundreds. I remember a payments IPO in, I think it was 2018, and I asked my Asian colleagues at the banks, I was representing a hedge fund, we were investing, and I said, well, what is the competitive landscape like just for this company? What's your subset of competitors that you're assessing when I talk to management, et cetera? And they said, well, we have about 3,000 competitors that we think are in competitive position competing with us in this space. It's just the scale of China often is lost, I think, on the Western community when we think about how competitive the markets are. I think that was a great point, Brian, in addition to your others. Thank you.
Yeah, let me bring in some economics here. And Jakob, I don't know if you're able to show my screen and replace the slides. Is that possible, Jakob? So Brian mentioned the intense competition, and I want to just put together very simple three things. Low marginal costs leads to intense competition, especially when products are differentiated. Especially when products are not differentiated. And then what is the effect of product differentiation, successful, meaningful product differentiation? How does that allow some firms to emerge and win, even though it's a very intense industry, intense market? So see if I can get this positioned correctly. So this is a standard econ graph with price on the vertical axis, quantity on the horizontal axis, and here's demand for a particular vehicle. And the current price is here, and the firm's marginal cost is here. So there's a margin between price and marginal cost. Whenever you have that, the question for the firm is, can you increase output? And if products are not differentiated, then the demand curve is pretty flat. It's pretty elastic. And what a firm will want to do, try to capture more of these margins, price minus marginal cost, over that extra range of output. The problem is all the firms want to do this. So when you have a low marginal cost, undifferentiated environment, it leads to blood on the tracks. You're going to get a lot of exit. You're not going to have all these firms survive. Some will go bankrupt, some will merge, some will find financial lifelines like Rivian did from VW. But this is what leads to this very intense competition. What Brian has explained, which I think is really wonderful, is that if you have successful product differentiation, two things happen. One is the demand curve for your vehicles shifts up. There's greater willingness to pay. But also, and this is the point that a lot of people miss, is it changes the character of the demand curve. Instead of the demand curve being really flat, reflecting great substitutability on differentiated products, the demand curve is less elastic. So I'm not drawing the shift up in demand. I'm just focusing on the fact that product differentiation means at the margin, your demand is less elastic. And that establishes a deterrent from just putting more and more cars out there. The margins, the price cost margins drop, and it's just not financially attractive. So if I can, and I want to wrap up here so we have time for open questions. But Logan, we can go back to the slides, I think. Thanks, Jakob. That was great. If we were to go to the first stock price chart, Jakob, let me try to give some context here. As I mentioned, we studied a lot of different industries, a lot of different markets, and this particular stock price chart, it's a mystery chart. What firm is it? And it turns out that, we learn things from other markets. Think about low marginal costs, undifferentiated products, consumer choice. It turns out that those things can really put a lot of pressure on a company, even a fairly successful company. So mobility was one of our verticals, but another vertical was video streaming. And you think, well, what does video streaming have to do with mobility? Well, it has the same kind of features: low marginal costs, potentially undifferentiated products. Consumers can switch, they can add, they can subtract. And Logan, maybe you could talk about the early days of the course where we were following this firm and we were predicting that the stock wouldn't do very well.
Yeah, so Ted, I don't know if you want to reveal the name, but we
Sure. Let's. Yeah.
So this is a chart of Netflix, which was a Wall Street darling. But the story, there was bulls and bears in the analyst community. I was covering Netflix as an investor at the time of their great bull run, and the idea was that, well, okay, so Netflix, they have a hit show, but they're investing billions of dollars in content, and so there's on this constant content wheel, and you don't know which of the shows are going to hit or not, and their growth kind of ran out. You see right in the middle of this chart, they had one of the largest valuation wipeouts in history of TMT, of the TMT space. But they subsequently recovered, and a large part of that growth, one of the catalysts of that recovery, was their ability to be successful in other markets, in foreign markets. They sold their American content. There was demand for American produced content, but they also expanded globally, and they brought in shows like The Squid Games, which was a Korean show, which was supposed to be for a niche audience, which blew up into a global phenomenon and was one of their most popular series. They made a lot of money off that. And so they are an example of a recovery story when they scaled the product scope, the differentiation. And so will we see similar behavior in the EV space, Ted? What do you think?
Yeah, exactly right, Logan. This is why we were skeptical about Netflix. We emphasized the low switching costs, consumers being able to switch from Netflix to Prime Video to Disney, etc. But what did they do? They figured out exactly what Logan said. There were things they learned about the ability of Netflix to leverage content. And the key is here, they leveraged it globally. So go back to what Brian said. Brian said that it's very important for successful EV manufacturers to expand globally. Get economies of scale, get economies of scope geographically. And let's go to the next slide. It looks a little similar. This is another mystery chart. What company is this? Well, it started out before 2006, so it's an early firm. And the hint here is it's an EV manufacturer. Logan, why don't you take this one and explain what you read into this chart and what explains the dramatic increase in market cap beginning around 2021.
So this is a chart of BYD. Brian, maybe you recognize this chart. Maybe it's familiar to you. This is traded on the Hong Kong Exchange. But this was the time period 2021, 2022, when BYD really accelerated. They had new technologies coming to market. Their manufacturing was better, and they overtook Tesla in terms of units. If you remember, or maybe the audience was unfamiliar, a large part of Tesla's narrative, Ted and I talk about narratives. What's the actual story of the company? Yes, we can look at charts, we can look at numbers and spreadsheets and all this, but when you actually meet executives such as Brian, they're going to unpack your vision for you. You ask them, what's the story of the company? So we talk about narratives. Narratives drive valuation, narratives drive a lot of things in companies. And BYD's narrative was strengthening in China at the same time. Tesla's narrative in China, though what a lot of people were bullish on it, was starting to stagnate. It was starting to slow down. Growth was slowed down. Unit sales are slowing down, incremental to the previous quarters. And what you see here is the success of BYD overtaking Tesla and some others. We don't want to say cementing as a leadership position, because in high tech, you don't see competitors own the space for 20 or 30 years. It doesn't work that way in tech, at least behaviorally with stocks. But we saw BYD's rise and Tesla's relative stagnation, and BYD is one of the current leaders in China and in other geos too. If we look at EU and the success they've had there, Ted.
Thank you, Logan. So the commonality between these two charts is, again, successful product differentiation, getting to scale, geographically. And there are also are network effects. Getting more people on a particular video platform that increases demand. You also get network effects in EVs. Let's go to the next slide, and this will be our last slide in terms of the EV discussion. And one of the things we've learned from talking to people like Brian and many other industry leaders in high-tech spaces is that every once in a while you're focused on your products, your competition, but it's also important to step back and look broadly. And here are things that Brian may want to comment on, but I think what I'm watching for is just what are the new innovations? How much demand boost will they generate? What are the limitations on EVs, if any? We touched on the question number 2. Will shared autonomous vehicles compete with passenger-owned EVs? And I think Brian's judgment is that there's still going to be a market for passenger-owned EVs, even as the autonomous capabilities improve. In the US, I think a big issue is the lack of infrastructure. You saw the 10% adoption rate. We've had really bad policy, in my opinion, around EVs. Subsidizing purchases without subsidizing infrastructure, to me, was a mistake. It's been a very poor development of EV charging stations. Plus, you don't have standards for the interfaces. And then we haven't talked about it, but obviously a big factor with the EV industry is, what are the equilibrium tariffs going to be? And I don't know. I don't know if anybody knows at this point, but those are some of the things we're looking at. And with that, let me close the presentation. It's different from what maybe, Brian, you expected, because we got a lot of insights from you along the way, but maybe you would like to open it up to questions and see what's on people's minds.
Sure. Yeah. Happy to take questions.
Let's start with people who are at the center, and then invite people who are online to use the Zoom chat to raise your hand and ask questions, put questions in the chat.
And please don't be shy. We value insight from everyone, and there's no bad questions. So feel free to raise your hand.
Jakob, how about we do this? I'll take maybe a couple questions from the floor first, and then maybe you can monitor the Zoom chat box and kind of unmute people or pose their questions. Okay, sure. Please press on the button of your mic continuously.
Hello?
Yes,
Is it working? All right. So, good morning, professors. Good evening, Dr. Gu. Thank you for the wonderful seminar and presentation. I have several questions. The first question is about, basically, we've been discussing about the general EV market, but I think we have mentioned several differences between the Chinese market and the US market specifically, especially when we consider how dense certain Chinese cities are and also the differences in the infrastructure and also how competitive the Chinese EV market is. And I wonder, like, are there any further intuitions on like some key factors or variables that we should consider when we compare the two markets, specifically between China and the US? And my second question is about, I mean, obviously the current tariff policies or the general US policies are encouraging certain production plants around the world to like relocate back to the US. And apparently the automobile industry is very globalized. But my question is, are there going to be different influences on the traditional automobile industry? I mean, like fossil fuel cars comparing to these new EVs. And my third question is a little off topic, specifically to Dr. Gu. Basically, I read about some of your interviews before coming here today, and it seems that what you are doing today has no relation to what you studied at school. And people always say how important like having a growth mindset is as a modern day student. So I wonder, are there any recommendations for current students like me who are still studying today? And like, how should I face future like career options or whatsoever? Thank you so much.
Should we start with the first one, Ted, or?
Yeah.
Yeah, well, how I think about it, and that this doesn't just apply to EVs, but when you look at the China market, I think the cities that have more than 1 million people is about 140 or so, I want to say, Ted. And so the market's absolutely huge. And so you have large competitors. Let's take e-commerce, for example. You may have a certain e-commerce competitor that will focus on tier 1 cities, tier 1 through tier 5, let's say. Those are classified by GDP. It's not a qualitative metric, it's how much GDP they produce, but those are large population centers. And so everything from like food delivery to streaming to renting hotel rooms, how competitive that industry is, to automotive, those are all going to impact the firm's strategy, their business strategy about how they're going to unlock growth in that markets. And then you look at, and then let's go back outside of China. Let's look at something like Africa. Let's take your fully autonomous vehicles. Well, it's difficult for you to change London in 10 years, but it's not that difficult relatively to change an infrastructure such as Africa or the rural Midwest in the United States, for example, because it's rural, it's remote, you can build things there, there's lots of space. You could change the game faster than you could in an established city. And so specifically when you look at China, if in all industries, payments even, you have a very large market, you have different population dynamics, different wealth levels in those markets. And so even if you essentially were a current market leader in 3 or 4 tier 1 cities, you can build a multi-billion-dollar business in that. And so the dynamics are definitely different in China. I'll defer to number 2, Ted, for tariffs maybe, and then we'll jump to Brian for number 3, however you want to handle it. Oops, you're on mute, Ted. Sorry about that.
I think we should go to the third question, and Brian, get your thoughts on that interesting question about advice to students about what they're studying and what they should study and how they should approach education.
Well, I think first of all, in our lifetimes, I think you're always learning new things, because I think every stage of your life you were faced with different opportunities. When I was a high school student in Shanghai, the only way to get to the US is to study science. So I went for a chemistry undergrad, and then because my mom was an organic chemist. So before I walked in, already a chemist major. But that is how you get to the US. And then when I, after my science, career, then I think, okay, I want to change and do something business-like. Then I went to the SOM. When I first arrived at SOM, I asked the teachers in the second year, okay, what is the best job? Banking, consulting. So then, okay, I need to do something different. So I went for banking consulting. But again, I view life as accumulation of your experiences. You don't study for the final outcome. I don't study chemistry because, obviously, I think that is a part of the knowledge that you learn along the way. It not necessarily is because the periodic table you memorize. It's actually how you approach a problem, how you tackle a problem, how you deal with a complex issue, how you work with a team, work with a collaborator in different university. So those skill sets always going to be with you. Same as in banking. I think, I spent 20 years in banking. I, did, deals in the US and in China. But along the way, I think the people you meet, the company, the business models you understand, the deals you accumulate experiences on, going to be all part of you. And that is how you grow. So I don't think necessarily you have to view yourself, okay, I'm making a decision for my life. You're making a decision for the moment that you think what drives you, what is the opportunity you want to go after, and just use whatever the skill sets you accumulate to date to go after that. And 10 years later, that's a completely different opportunity. That's how you grow over time.
Thank you. Carol, is there somebody else we should call on?
Sure. From this side, please press on the button continuously. Thanks.
My question is probably more for Dr. Gu. I want to know what are your opinions on Cyrus, who work with Huawei, and they're doing pretty well on their market for the cars over 500K yuan. Just what do you think about them?
Talking about Cyrus, the company, right? The automotive company in Chongqing. By the way, for people who don't know the name, they actually produce this Wenjie, which is a collaboration between Cyrus and Huawei. Huawei is a solution provider, provides the technology, the smart driving system, and also help them market and sell in Huawei stores. Because of that collaboration, Cyrus went from a little-known automotive company to now one of the largest in market value on A-share. I think, first of all, I think this is a very successful collaboration. Huawei is a powerful technology company. They made a decision not to make cars themselves. So they found a partner. Initially, they found the weakest partner so they can actually have more influence and control. I think that also made a difference. So Cyrus basically, followed everything that Huawei asked them to do. Secondly, I think they also found a very niche area to focus on, which is the family-focused large format vehicles, which are the SUVs, so M9, M8, M7, M6, very similar to Li Auto. They actually learned the Li Auto strategy is focusing on large format, family-focused vehicles. That gave them higher margin, also more attractive, I would say, revenue base. I would say going forward for Cyrus, the challenge is how to grow out of Huawei's influence, because Huawei now has 8 other companies that they're partnering with and they're enabling in the same way. So how does Cyrus differentiate? Secondly is that with Huawei as a partner, how can Cyrus become global? Because that's challenging to bring the Huawei technology or Huawei partnership to be a global company. So those two things are something that they have to figure out. I actually met with the president of Cyrus just last week in one of the Malaysian summit. They're actively thinking about that. But I think currently they're obviously enjoying tremendous success with the partnership. But I think they need to think about what's next. And also how does Cyrus define itself other than just being a Huawei manufacturer.
Jakob, is there anyone you want to call on from the Zoom?
Yeah, we have Ted. We have two questions. First is from David, and David didn't say who is this the question to, but how do you see the development of FCEV, which I believe stands for the hydrogen cell, since the adoption rate is low? Thank you.
Brian?
Yeah, cell is hydrogen-powered vehicles. They actually been in development for as long as EV, I think, because the challenge for fuel cell is one, currently it's still, I think technology is not there yet to make it cheap, safe, and scalable. Also, that's going to be a issue that have to overcome. Secondly, is that there's no infrastructure. I mean, you need fuel cell stations where you need to build from scratch. Think about how many years it takes to build charging stations around the world. Building fuel cell infrastructure will take decades. So that also adds to the problem of launching a new technology. I think electric mobility is already being at least accepted by most of the countries to be the sort of the standard for new energy vehicles. I think fuel cell has to work out these problems before they become somewhat mainstream.
Jakob, what was the other question?
How do you think which company will lead the robotaxi market in China in the future?
I think the robotaxi, as I mentioned, there are two ways to tackle the problem. One is level 4 companies, which are Baidu, Pony, maybe WeRide. Those are companies that directly trying to develop robotaxi solutions. There are the other companies I would define as Xpeng, maybe Tesla or others that think this could be a gradual process where we go from the level 2+ today to level 3 to level 4, ultimately get to robotaxi. I think both has a valid case to make. We believe that ultimately it's I think technology will be there. Ultimate differentiation is going to be the cost and scalability. And I think as an OEM, I think we have a better chance of scalable business with the right cost structure.
Thank you. Let me just, Jakob, if we could wrap up and just go
That
to
was the last question, actually,
Yeah.
for Brian. I just want to say thank you very much to Dr. Gu and Ted and Logan and our very engaged audiences in person and online and over live streaming. Thank you very much for making this happen. So let's give everyone a round of applause.
Thank you.
And wait for the next edition of Ted and Logan's briefings on high-tech industries. Thank you very much.
Thank you.
And thank you so much, Dr.
Again,
Gu.
Dean Schneider, please consider a trip to China. We'll show you what's happening on the ground here.
amazing what's happening, and I'd love to get back. Long time since I visited Dongfeng Motor back in 1993. All right.
Go to Guangzhou
Very
and
different.
elsewhere for Xiaopeng. Thank you.
Thank you.
Thank you. Thank you, Dr. Gu. Thank you, Carol. Bye-bye.
Thank you all. Bye.